In a past video, I touched on alternative assets and covered some examples of what they are, and today I want to go deeper on one of them, which is gold. My goal with this business, other than providing great investment opportunities, is to shed light on assets outside of your 401k or traditional stock portfolio that you may not have considered as part of your investing strategy. So today I'll cover gold at a high level and share 3 reasons it might benefit you to own it. Before diving in, I want to highlight that this is not financial advice and it's for education purposes only. So please consult your financial professional before making any investing decisions. So the first thing I share about gold and other precious metals like silver are that they're not technically an investment. That might sound strange on the surface, but the way I would define an investment is something that produces income, and precious metals do not do that. If you want to speculate on the price of gold and what it might do in the short term, you can trade it. But my personal strategy with something like gold is to hold it for the long term. So why do I plan to hold on to gold for the long term? The first reason is that gold has been traded for thousands of years and it has intrinsic value due to its rarity. It's the world's oldest form of money, and with a track record like that, I don't see it changing anytime soon. There's a lot of historical significance with gold, and today it also has a ton of industrial uses. Pretty much anywhere you go in the world, developed country or not, gold is sought after and it's deemed valuable. Just take a look at this chart, which highlights how much gold, which in this case it's measured in tons, is owned by each nation listed. A second reason is that gold is a store of value. As mentioned, it doesn't produce income, but instead it's used to preserve your wealth and over the long term can protect you against the devaluing paper currency. We're seeing this right now with high inflation. In other words, as the value of paper currencies depreciate in value, the price of gold tends to rise, which can insulate your money from losing its value. Think of it like a form of insurance that will protect your wealth. A really cool way to see this illustrated is at pricedingold.com, where you can select different products and see how much of that product gold would buy you over a timeline. As a fun example, let's take a Big Mac from McDonald's. Here, you can actually see that the price of a Big Mac denominated in gold would cost about the same today as it did in 1985. The price of gold has fluctuated in the interim, but over the long term, gold still held its value. Consider what this chart would look like if it were to measure the Big Mac's price in dollars. It would be on a very steady up and to the right trend. Last but not least, consider buying gold simply to diversify. During tough economic times or when there's geopolitical tension, gold is seen as a safe haven, and it's usually inversely related to what's happening in the stock market. Recently, gold crossed $2,000 an ounce, which it's only done a few other times, and much of that's due to fear of a tough economic road ahead. So those are 3 reasons I like gold and why it's something you might want to look into. There are a handful of other reasons gold's attractive to own that I didn't cover in this video. So if you'd like to continue the conversation, please sign up for the Rule 72 Investor Club at the link shared in my bio, and let's book some time to have a conversation. Chat with you soon.